Welcome back to the channel, everybody. It is week number 9 into investing into my portfolio. Like I always say, it's amazing to me that, I've been this consistent for that long. So it's almost coming up on 3 months. I'm super excited just to get into this video and start investing again. Last week, I kind of held some cash. I didn't invest anything. I didn't buy anything because I didn't see any investments that I did want to make. But I do have my eye on one stock today. But let's just get into looking over my portfolio and what I own and then what's on my watch list, the usual. So the type of investing style that I do is dividend investing. Now, dividend investing is that, when you hold the stock, you get paid for holding it over time. And, it's just one strategy. There's so many other strategies that you could use. You don't have to just be like me and just only buy stocks that give off a dividend. I'm just like the cash flow king. If it doesn't pay me while I hold it, then I don't like it. And that's just me. You can always make money in different ways in the stock market, through capital gains, through shorting stocks, through options, trading, there's stuff like that. But me, I feel most comfortable with my dividend investing portfolio because I do like the extra income that I get for investing into these stocks. Well, without further ado, let's get into my stock and let's see how we're doing today. All right, so let's open Robinhood. All right, so my total portfolio is at $5,500.82.81. So on the day, we're down 0.46 cents, which is 0.01%. On the week, we're up $41.35, which is 0.75%. On the month, we are up $28.09, which equals 2.51%. 3 months, which has been nice, we've been up $90.23, which is a 1.64%, and on the year, the same as well. So let's see, right here we have a buying power of $571.69. So last week's video got 17 likes, so I put in an extra $290 to invest. So, remember, every time you guys like the video, it equals $10 that I have to put into my portfolio for buying power. So smash the like button if you haven't already so you can put in your $10 into my portfolio. So I got Apple shares, and that's the real estate, AT&T, AGNC, British Petroleum, CubeSmart Storage, ConocoPhillips, Coca-Cola, Disney, ET, Ford, Hanesbrands, Iron Mountain, SPHD, JP Morgan, Peggy, Pfizer, Royal Dutch Shell, which is a Shell gas station, Starbucks, Unilever, and CEFL. I've been watching a couple of videos over the last week, and I saw that because I was wanting to put up in my position into AT&T. I like what they're doing, and they're actually coming out with this thing called the HBO Max. So they have acquired Time Warner, and Time Warner owns HBO and Cinemax, so they're gonna combine HBO and Cinemax and make a HBO Max, which is like trying to compete with Disney Plus, Netflix. It's like a streaming service, so they're trying to compile all that stuff together and just put it out to the crowd and see how it reacts. They're gonna do it for like $14 a month, which is, I don't know, I don't sound too crazy about it. Like, I don't know, I think they're coming in late to the game for like streaming services and stuff like that, and they bought DirecTV, so I don't know, that was not like the best acquisition for them at all. So, but a couple analysts have been saying that don't buy AT&T unless it's at the price of like $25. That's their valuation. There are some people saying with its HBO Max deal that it's going to go to $60 plus, but as you can see, like, let's just look at over the 5-year span, it's only been up $4.07. It has a nice dividend at 7.04%, but over the last 10 years as well, it's only been growing like 47%. I think it's actually when it started, AT&T started, to where it's at now. It's only been up, the stock price, 47% compared to S&P 500, which is 157%. So they're falling behind the line. So they need to start making like dramatic changes to the management and, get some products out there that is actually starting to catch friction so that the stock price can rise. So, but we're not in it for the stock price, we're in it for the dividends, which they do have a nice one, so I like that. But I think I'm gonna wait on AT&T just so that if it goes down a little bit more, then I'll buy a couple more shares. But the key is always stay consistent with investing. AGNC, I'm gonna pick up some. The ones that have been performing great, Disney, I'm up $31 on that. The thing about Disney though is that they pay twice a year, so I get one check every 6 months. So it's a while, but you know, it's a good growth stock, I think. Ford, I'll probably be adding position, but they've been jumping the Ford price, so you can see I'm up $23 on that. So it's been nice. I think that's probably due to their new electric car that they're going to be dropping. But what's on my watch list is ExxonMobil. Like I said, I'm gonna chill off of the oil stocks right now, even though they're at like historical 10-year lows. I'm still, my positions are high in the oil stock industry, so you don't want to have too many sectors filled up too high. You know, you want to have a good, balanced, diversified portfolio. Bank of America, I've been looking into. Apple stock, I think it's just overpriced, but you know, who knows. McDonald's, great price. Pepsi, and I want to get in big position into Pepsi and McDonald's. Like, I just need save a little more money so I can do that. And you guys can hit the like button more so I can invest more. Waste Management, Verizon, British American Tobacco. So SPG, Simon Property Group. So their price is $144.92, and they pay a 4.7 dividend yield. And they're a REIT, which means they own the most number of malls in the country. So they're the biggest retail mall real estate company in the country, and it's been getting hit, honestly. Like, you could check the 5-year trend, it's been down 20%. That 4.7 dividend comes out to like $8.40. So that's nice. So if I even grab 3 of these, I'm making $25, you know, per year on that investment. But the thing is, with the PE ratio, it's kind of high for me. Anything over 100% of the PE ratio, you should be wary of it. But you know, I try to look for a PE ratio of like 60% or below, or even 80%. That's kind of pushing it, or below. So I'll explain to you guys in another video what all this means. I'm gonna explain to you the language of investing and language of dividends, so that you're not lost all the time. And I'll make sure it's like very, very simple. 3M, XLRE, XLP, and MPLX. XL, so this is a real estate sector ETF, so it just has a bunch of different real estate stocks into it, compiled into one, and it pays a dividend. And this one is the consumer staples, so it's like, I think it's like Coca-Cola, the consumer staples, different stocks. But the XLP, MPLX, they got some good ones here. I gotten paid the AGNC, so they did promise me that $2.56, and that's what I got. Got one coming soon, Coca-Cola, $2.40, and then Apple dividend, and then a couple more this month, but they haven't filled in yet. So now we're going to be buying a stock. The stock that I was looking into is 3M, and they're priced at $167.95. Now you might say to yourself, damn, that's a lot of money. It's not that much money. You think about stuff that you pay for $167, like you probably use that to buy new shoes, and you know, the shoes go away, they don't have no value no more, they don't pay you. But this one has a nice dividend yield of 2.86, which is a great, and I forgot what the payout ratio, but it is healthy, and they pay a nice dividend for, I think it's like $4 to $5 or $5.40 for the dividend for each stock that you hold. Let's just check the week. You know, it's been taking a hit, especially on the 1 year, down 16%, but on the 5 year, it's been doing pretty solid. So let's look down at what they do. 3M is a technology company which manufactures industrial, safety, and consumer products. So anything that you need, they do provide it. As you can see that what I just said. So you know, we all need, you know, healthcare, electronics, energy, and just different types of consumer products. So I'm going to be buying this. So we're going to hit the buy button. We're going to buy 3 of them for a total of $503.82 at $167.94 dollars. Let's get it. Order received, order placed. So once that fills, it is going to get added into my portfolio. So I'm excited about that, and I'm probably going to be adding even more to it over the days, but you know, I just got to save up. $167 ain't cheap for a stock. I just bought 3 of those, so it came out to $500. So now my buying power is $67.93. Let's see what else we could buy with that. I think I want to add to my Hanesbrands position. I'll probably buy one of those for $14.97. Sending order received. Great, we just bought that. Now we have 8 shares of that. I'm gonna add to my Pfizer position. I'm gonna buy one of those, and then let's see how much we have left. $14. You know, we always gotta buy some Ford. It's just a must. they're not gonna go out of business for sure. All right, and there you go. Bought a Ford share for $9.12. So that is it. Thank you guys for watching so much. I appreciate the views. Comment down below. Tell me what you think of the video. Tell me what I should add. Ask me any questions. I'm here to ask for it. I would just say, whatever different investment strategy that you use, it is totally fine. The only thing is that you stay consistent, and consistency runs throughout everything in life. So if there is one investment strategy that does work for 100% guaranteed, it's just staying consistent. And once you stay consistent, then that stockpile of cash is going to build up, and the stocks are going to build up, and the dividends are going to build up. And that's just, if you do a push-up a day, you probably get a little bigger every single day. But the key to that is just doing it every day, staying consistent. So smash the like button, please subscribe, and thank you guys for watching so much. Have a good one.